All right, let's set the scene. The market is absolutely on fire. The Dow is ripping higher, the Nasdaq is soaring, and you can almost hear the collective sigh of relief from investors everywhere. It feels like the all clear has finally been sounded. But what if that feeling is just plain wrong? Today, we're going to pull back the curtain and take you inside a single critical day at PhilStockWorld.com to see how they break down a market that might just be built on nothing but sand.
Okay, so let's dive right in. The big question for the day is pretty simple. Is this spectacular rally the real deal, or is it just a beautiful illusion, a house of cards waiting for a breeze? While the mainstream media is popping the champagne, some of the sharpest minds out there are raising a pretty big red flag.
And that brings us to Phil Davis, the founder of PhilStockWorld. Now, you've probably seen his name pop up in places like Forbes, CNBC, or as one of Seeking Alpha's most read analysts, and for good reason. He's been training top hedge fund managers for years. And that kind of experience, well, it gives you a unique lens. It tells you to dig a little deeper when everyone else is just celebrating the headline numbers.
So here's the core of it. On one hand, you've got the market view. Everything's great, strong bounce, good earnings, all sunshine and rainbows. But on Phil's side, he sees a completely different picture. He calls it a forced rally, driven by a Fed that's in panic mode. His main thesis is that this isn't about fundamentals. It's about over $22 trillion in cash just sitting on the sidelines, earning nothing. That money has to go somewhere, and it creates these wild swings as it sloshes around looking for a home.
Now, at PhilStockWorld, the analysis isn't just a one-man show. Not even close. It's a team effort, and let me tell you, this team includes some of the most advanced AI and AGI minds on the planet, giving real-time, data-driven insights that are just next level. So let's meet a couple of the key players who help cut through all that noise. This is where the analysis at PSW goes from just plain great to something else entirely, with a team of AI and AGI analysts dissecting the market from every conceivable angle. First up, we have Warren 2.0. He's the original AI analyst on the team, and his whole job is to take Phil's lessons and distill them into pure, timeless wisdom. Today, he's pinpointed what he calls synthetic forces behind the rally. We're talking forced Fed moves and this massive gamma unwind, which is a fancy way of saying options dealers were forced to buy stock, pushing the market up whether they wanted to or not. As Warren puts it, and this is key, the rally happened because people had to buy, not because they wanted to buy. Big, big difference. And then you have Zephyr, the finance sector specialist. His job is to frame the day's real battle, and he nails it. Tech resilience versus macro haze. He points out that the market is basically plugging its ears and ignoring all the actual economic data, all because it's clinging to this simple story that a new friendly Fed chair is on the way. But look, PhilStockWorld isn't just about high-level theory. It's a real, living community built on direct mentorship. Because honestly, what good is all this big-picture analysis if you can't actually use it in your own trades? And man, nothing shows this better than a real-time question from a member right in the live chat. So a member is in a bit of a tough spot. Their trade is struggling, even though the stock is kind of doing what they expected. So they ask a pretty straightforward technical question. Where should I put my stop loss? And this is where the magic really happens. Phil doesn't just give him a price, he diagnoses the root cause. He sees that the problem isn't the stop loss, it's the entire construction of the trade. It was fundamentally flawed right from the start. And boom, this is that incredible educational loop in action. Warren 2.0 immediately takes that moment of mentorship and turns it into a powerful universal lesson for everyone in the community. A well-built trade is designed to handle a little chaos. It's not supposed to shatter at the first sign of trouble. The members' panic wasn't a market problem, it was an architecture problem. I mean, this is market wisdom on a legendary scale, the kind you just can't get from a textbook. Okay, let's fast forward to the main event of the day. The market's still flying high, the party is in full swing, but a huge piece of economic data is about to drop, the Federal Reserve's Beige Book. This is the moment of truth. Is the data actually going to back up the rally? 2 o'clock hits and the report is out. And you have to understand, this isn't some analyst's forecast or guess. This is the Fed's own report from their contacts on the ground all across the country. This is what's really happening in the economy. And the disconnect is stunning. Just wow. The market is trading like the consumer is strong, but the Beige Book says spending declined. The market is pricing in a perfect Goldilocks economy. The Fed's report is talking about a softening labor market and shrinking profit margins. It's like they're describing two completely different planets. And here comes Warren 2.0 with the final data-backed verdict. There is nothing in this report, absolutely nothing, that justifies this fear of missing out rally. In fact, the data points in the complete opposite direction. So Phil's initial thesis from the morning, that this whole thing is built on sand, confirmed by the Federal Reserve itself. So, after a day like that, how do you put it all together? Well, at PhilStockWorld, it ends with a crystal clear verdict that cuts right through all the market noise and gives you something you can actually use. This recap just lays it all out so perfectly. On the left, you see the market action. Indexes hit new highs. Simple enough. But the PSW insight on the right, that's the real story. This was a rally driven by positioning, not real money. The Beige Book confirms the economy is cooling, which proves the rally is based on a story, not on facts. And all of that leads to the crucial strategy. You sell this fantasy to the believers, you don't buy into it yourself. And there it is, the bottom line. This isn't about being a bear or a bull. It's about being a realist. The plan isn't to chase this low-volume rally higher. It's to use this irrational strength as an opportunity to sell options premium, basically selling insurance to the optimists, while making sure you keep your own protection in place for when reality decides to show up again. You know, when you see a whole day breakdown like this, from that initial contrarian idea to the AI data dive to a live teaching masterclass, all the way to a final actionable strategy, it really leads to a simple question. Does your daily market prep go this deep? If you're ready to move beyond the simple headlines and really understand the forces that are driving these markets, well, this is the kind of analysis that makes all the difference.